Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what we think is likely to occur next. As I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe. By tapping the bell and selecting all the notifications, you will not miss another video update. If you haven't yet joined us in Discord, guys, you're missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into this one though. We're going to be taking a look at smart money concepts, that's what you see here, and also Elliott wave theory here as well. So we'll start with Elliott wave theory. Let's see what's going on, right? So we can see that we had this 5-wave structural move to the upside. This is kind of following on from yesterday, and we still have our higher range expectations. It doesn't look like we have started this move to the upside, in my opinion. I think we still have this move to the downside. However, it is important that we reflect on what is going on here most recently, because I do think it's going to be a little bit volatile here over the weekend as we kind of see this thing kind of pull back down a little bit further. It could just be kind of been trading sideways, as you can kind of see here. It has been trading sideways pretty much since late Friday, and we're in a bit of a ranging market. So let's go ahead and dive down into this little bit area just here on this Sunday so we can get an idea as to kind of where things are. So as we can kind of see, we have this kind of interesting kind of move here where we kind of bounced up and down a little bit just inside there. And we also have a very similar one right inside here if I grab the right tool. And we come up to this point here. It does look like we have to come on down just a little bit further here, at least as we kind of continue this ranging market. Somewhere like this, and I think if we were to look at it, I think it would be approximately somewhere in this little range down here, and it'll be not a new local low either. So 28,255 to about 28,308 approximately. So we can kind of see that that's kind of the next expectation. But on a bigger scale of this thing, we should be thinking about slightly deeper, right? We can't just be thinking that we're not going to hit those minimum levels. That's about right. That's good. So my minimum expectation will be a double bottom. That would be right here at 28,222. I'll get rid of this line here. We don't need this one, and we don't need this one now. Yeah, 28,220 right there. That's going to be our minimum expectation. But we should be realistically thinking more about coming into this range at around the 27,845 to 27,984. That range there would be more typical of a move that we would be kind of looking for here, which would be a giant A, B, and C structure like this. So be one of those. We'll keep an eye on this. Like for example, that 28,220, this white line just here, is actually looking like it might hold up, and if it does, then that's going to be where we kind of see that next move to the upside. However, my expectations here are that we'll probably have to move down a little bit deeper. Like I said in yesterday's video, it looks like we actually have to come down even further than this, right? So lower than the 27.8, we really ought to be thinking about a double bottom on this one at 27,511 to kind of allow for that kind of bigger corrective structure here. So what I'm saying, guys, essentially here, if you're following Elliott wave theory and you understand this, is that we have this kind of choppy corrective structure coming in down here. We might find ourselves with a bit of a bounce upwards before we then continue coming down like this. So expect some volatility, essentially, is what I'm saying here, because it's going to go both up and down before we actually reach our targeted range on this lower side. So my expectations are that we have to kind of come down, considering these structures and the way that we're not creating this first wave yet up here, is that we have to kind of come down into these lows at least to 27,511 before we can start to get that 5-wave structure, because I am expecting a 5-wave structure to take us up higher than the local high, but we can't really expect to do that until we've met these minimum expectations. So that's kind of where I sit with this one. I think from an Elliott wave theory point of view, not a lot has overly changed here. It's been a very boring sideways trading weekend, and if I were to trade it, I would potentially be looking at at, I mean, I don't know if I could short this right now. I think the entry isn't brilliant. We'd obviously want to make sure that our stop loss would be above the swing high, and we would target that minimum expectation down here. It would be about a 2.02 risk reward ratio, which wouldn't be too bad, but I think there's better entries to be had personally. But you can kind of see how that one could play out in our favor. And then of course, once we're down at the bottom here and we're into this, we can either choose to come in on a long on this 27,500 level with our stop loss below the swing low down here, and our target above the swing high. Again, that gets us a 1.69. I would personally be thinking and looking for much better entries on the long, but given the fact that we haven't seen this data kind of unfold yet, you know, you can kind of get the idea. Go short before you go long, because I do think we're going to see some interesting moves. Now, if you are actively trading, why not check out Bitget, linked in the description down below. Bitget is my go-to platform now for all my spot and leverage trading. I am tired of all the wicks that I find on these other platforms, so I am solely using Bitget now. Now, they do some fantastic offers such as cashback. At the moment, if you deposit $50 USDT, you'll get $10 USDT cashback. And of course, they do deposit and reward bonuses all the way up to $8,000 as well, depending on how much you deposit on the platform and how much you trade on the platform. So I think it's a fantastic way to kind of onboard and get you used to the kind of features and functions that Bitget has to offer. If you haven't yet signed up, check it out, linked in the description down below. I don't think you'll regret it. As I said, personally, it's my go-to platform. Now, we are using Bitget, and for anyone who does sign up with the link in the description below and joins us down in a Discord server, you can take part in a weekly competition where we have 100 USDT every single week up for grabs for the person who has the best ROI percentage within their trading account on Bitget. So basically what we're doing here is we're using all of the Bitget data. So you do your trading on Bitget, and all that data then feeds into this competition if you sign up to it. And the person who has the best ROI in the week will essentially, it's ROI percentage, by the way, guys, not dollar value, but ROI percentage. The person with the best percentage gains in that week period will win the $100 USDT prize. Now, we are, of course, going to be expanding this. It starts at 100. We're going to be looking to kind of scale this up to 1,000 a week, and then 10,000 a week, and so forth. And it might be the top 3 people, the top 5, the top 10, and so forth. So we only just started. Check it out if it's of interest to you. Bitget linked in the description down below. Let's jump on down into smart money concepts, right? So if we understand we're going to expect a lot of volatility from Elliott Wave theory's approach to the market. What does smart money concepts tell us? Does it tell us the same thing as Elliott Wave theory? Does it conform to that? Or is it actually telling us the opposite, right? And we're ready to go to the moon. So let's take a look at this, right? So here, obviously, Bitcoin paired up with Tether. Hourly chart, Binance's data source, same as Elliott Wave theory here. Okay, now from here we can obviously see hourly chart and so forth, and here hourly chart and so forth. So what's going on? Well, we're in a bullish state of market, okay, from our fake out down here, right? So we had a fake out when it comes to our bearish signal. We have a bullish signal. It's holding well at the moment. Now, we're riding the 50 EMA. We can see that right here. And we're above the 200 EMA. Now, we are, of course, above the equilibrium as well, and we can see that there are some internal buy order blocks in here as well. We can see that the fair value gaps still remain. They haven't been filled out, and we can see that there's a little bit of resistance right up here with an internal sell order block. This is also an area that you can see in heavy as supply, basically where people are willing to kind of offload their BTC. So we can find ourselves in an interesting kind of position. Now, to kind of take a look at this from a smart money concepts point of view, what's actually going on here? Well, we have a structure that is bullish, right? And even at the micro level, we're looking okay. We have a weak high indicating that we can push up higher, and a strong low likely to hold. We're above equilibrium. We're above the 2 EMAs, so the 50 and the 200. So everything here is actually looking pretty bullish, right? But there's a couple of things here that's probably worth noting. And that is the fact that we are on a slow weekend. And that's never a good sign. We can, of course, draw in our trend lines here just to kind of help illustrate a couple of things. And that is that we are sliding to the downside a little bit. My expectations are that we have to move down here. And the only way that we can kind of cut this any other way is that we are wedging ourselves up like this. But I think that's a bit too tight by itself. Now, if we take a look at this stochastic RSI on the hourly chart, if I come into my settings here, you can see that this one is on an RSI source of close. Okay, and if I come over to this one over here, we can come into here and we're also on close. But if I change this to OHLC4, which is my preferred one, I'm not sure why it was changed, it does change how the approach of the RSI source. What this means is you're using an average position of every candle rather than the close position of every candle. And if we take a look at this close position, it's actually not too different here, but it is actually a slightly more bearish on the close side, I believe. We are hovering at 37.46 and 34.87. So when we're just taking the close positions, it is actually looking like it's correcting faster than it is when we're losing the average positions on those stochastic RSIs. Why am I saying this? Well, it's saying this because when we take a look at it from those two different angles, we can obviously appreciate that there is still further downside to go when you take a look at it from an average position of every candle versus just the close position of every candle. Sometimes it's why you find that you're oversold or overbought for a long period of time, is if you're looking at it just from a closed position or an open position. I personally like to use the average position of every candle. It takes into consideration the wicks and the body of the candles, and then averages everything out, and then it gives you an average price per candle, which allows you then to have a much kind of more I guess, how do I articulate it? Like a curvier line over a period of time. It allows you to kind of see things in a slightly more accurate way, in my humble opinion. So I like to make sure I have OHLC4 selected rather than closed, but I like to compare the two. So when I talk about these things, it looks like we still have this room to the downside, not only here on this closed position on the Smart Money Concepts chart, but we actually have further to go when it takes a look at it from an average position on the Elliottway theory chart. So it does look like we have to slide on down. So lower lows and lower highs have a tendency, as I always say, to break downwards. It looks like we're probably going to lose the 50 EMA, but do expect some volatility, right? Just because we can go down doesn't mean that we are going to, because as I said, the weekend is pretty much driven from emotional retail investors, and Sundays have a tendency to have a break to the upside. So although I am saying everything here looks like it needs to come on down, don't be too surprised if things do go the other way, and that's just pretty much a typical kind of weekend Sunday thing. But hopefully we'll see this actually play out as it should, rather than as the emotional retail investors force it to do so. So yeah, from the angle here, we can see that Smart Money Concepts is basically aligned to the bullish idea that we have to push up higher, but it doesn't really give us much confidence in thinking that we can come down deeper. So Smart Money Concepts is actually saying, you know, we're finding support, we're right on this kind of range down here where there's buyers. Chances are that we actually push upwards, not downwards, right? So Smart Money Concepts doesn't really kind of say that we have to come down and test those lows in the same way that Elliottway theory does. So to me, it looks like according to Smart Money Concepts, we should just be going straight upwards. So we do get a little bit of conflict between these two kind of ways of approaching the market. Personally, I think we have to kind of come on down before we can go up, but we'll see how this one plays out. Let me know what your thoughts are down in the comments below. Do you think it's going to be straight up here from finding on these support levels, or do you think these support levels will crumble and we'll start to move on down before we actually get that next 5-wave structural move to the upside? Let me know. Really interested to canvass everyone's thoughts and opinions. Now, if you found this useful, informative, smash that like button. Really do appreciate that. If you're new, subscribe. Don't forget to join us in Discord and check out Bitget, guys. Until the next one, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.